Hi all, Mary the Tall One here. So welcome to my channel. If you haven't seen it before, I am invested in a lot of yield max funds, and I do dividend investing, kind of. I recently found out if you make enough money outside of like your regular job that you would owe at least $1,000 in taxes, then you need to do a 1040 ES. That is estimated taxes for what you're going to earn over the year. And I mean, you do it quarter by quarter. So for September through December, you need to pay by January 15th an estimated amount for that quarter. So this is new to me, and I have just been reviewing the tax forms, trying to understand what I need to do. And I'll show you. Okay, let me just show you my investment income. So over here, we have my 2024. I kind of moved it to the side because now I'm calculating my 2025 year-to-date and year-to-date taxes. But for 2024, I earned $37,000 in dividends / distributions. The yield max funds pay distributions. 2024 options, I made $5,500. My total tax obligation was $12,000. And so that's where I know I owe more than $1,000 in taxes from something that did not have taxes withheld. This isn't like a regular job where they're withholding taxes. This is just paying you out. And nothing's being sent directly to the IRS. And they need to receive something every quarter if you owe more than $1,000 worth of taxes. So you can find this form 1040 ES on irs.gov, and it says right here, estimated tax is the method used to pay tax on income that isn't subject to withholding. For example, earnings from self-employment, interest, dividends, rents, alimony, etc. Now, there are some general rules. In most cases, you must pay the estimated tax for 2024 if both of the following apply. So 1, you expect to owe at least $1,000 in tax for 2024. So that is true for me. However, you expect your withholdings and refundable credits to be less than the smaller of either 90% of the tax to be shown on your 2024 tax return or 100% of the tax to be shown on your 2023 tax return. So I still needed it explained to me like a 5-year-old, okay? So chat says, okay, imagine you're at a lemonade stand and you have to pay money for the lemonade you drank. The lemonade stand owner, the IRS, doesn't want you to wait until the end of the day to pay for all the lemonade you drank. They want you to pay a little by little as you drink it. But they also don't want to be mean if you didn't pay exactly the right amount during the day. They say if you pay for 90% of the lemonade you're going to drink today, that's okay, we won't get mad. Or if you pay us at least the same amount you paid yesterday, that's okay too. And so that's the one that applies to me. I already paid the amount that I paid in 2023, so I should be okay for 2024 to just pay my regular taxes in April 15th, whatever the due date of normal taxes is. If you have to do this ES form, then for your fourth quarter, September through December, taxes are due, your estimated quarterly taxes are due January 15th, which is coming up. So 9 days away from the time of making this video. So of course, when I heard that, I panicked a little, but I think that for me, having paid more than what I paid in 2023, I should be okay. Okay, so if in 2024 you made over $24,600 of income after the standard deduction, and that income did not have taxes withheld, so it just came from your distributions, then you most likely owe more than $1,000 in taxes, and you would be obligated to do these quarterly estimate payments, with the exception that if you paid more in 2024 in taxes than you did in 2023, then you're covered. and you don't have to do these quarterly estimates. Does that make sense? It's kind of wild. The other thing is the penalty. So say you didn't know about this rule and you didn't pay your quarterly payments and you were obligated to do so, then you would be charged the federal short-term interest rate plus 3%. The federal short-term interest rate for 2024 and right now I think is approximately 4%. Plus 3% is part of the penalty. So 7% total interest on whatever it was that you were supposed to pay quarterly. So yeah, so that's how I'm understanding it. This is all new to me. I didn't know anything about this 24 hours ago. So if I'm incorrect about anything, please let me know down in the comments. Just trying to give you the information that I have at this time. All right, so on to my portfolio updates. If anybody's interested, I have made some changes. So this is a gross estimate for what I would love to see if everything pays out at the highest amount going forward. We have a yield max performance sheet, and this just shows you the max payout, the average payout, and the min payout for all the yield max funds. And I pay special attention to this number right here. This is what you get per dollar. So for every dollar invested in Tesla right now, based on the price and the payouts, the average pay is about 8 cents on the dollar. So you get about 8 cents for every dollar you've invested in it. Anyway, back to my investment sheet. You'll see right here, I have those same average pay per dollar. And what I'm doing is I'm using those numbers to calculate a percentage of Tesla, NVIDIA, Coney, and Misty based on how much they pay. Coney pays the best per dollar, so I have the most allocated to Coney. And subtracted from all of these is these other funds here. I am diversifying. I know a bull market can't last forever. Misty and Coney are both heavily reliant on Bitcoin. So gold is not affiliated with Bitcoin. So an ARCC, probably not, although I think they are, what are they, like a business development company. So I don't think they're affected by Bitcoin. And they also have a good dividend. So it's like a 9 or 10% yield. MGK is a great performer. It's like the top 100-ish large cap companies. XLE is inversely correlated to MGK. So when MGK was going down in 2022, XLE was going up in 2022. So, I mean, if they're correlated at all, it would be an inverse correlation. They might not be inversely correlated. I might have misspoke there. They might be just not correlated. SOXX is semiconductors. Of course, you know, NVIDIA and SOXX are kind of in the same bucket. SCHH and VNQ are REITs. So REIT ETFs, they should not be affected by Bitcoin or semiconductors. Then IVV is just a better version of SPY. So IVV is the exact same holdings, but with a lower expense ratio and a higher dividend. Not much higher. Don't get excited. This barely pays anything. SCHD is another classic dividend stock that's supposed to be safe. But you know what? Since I bought SCHD, it has gone down. Last one on my list is VYM. That's the Vanguard High Dividend Yield ETF. It's slightly different sectors than most of the other ETFs I have, and it does yield some of a dividend. All right, thank you for watching. Please like and subscribe if you found this information helpful in some type of way. All right, thanks, bye.